Ladies and gentlemen, wake up. Put down the coffee and look at the screen. What happened this morning in the snowy peaks of Davos wasn't just an interview. It wasn't just politics as usual. It was a declaration of war on the value of the money in your pocket. We are watching the independence of the Federal Reserve die in real time. It is January 22, 2026. The location? The World Economic Forum in Davos. The player? President Donald Trump. And the target? Jerome Powell, the man currently holding the keys to the global economy. In an interview with CNBC that aired just hours ago, the president didn't just hint that he wants Powell gone. He issued what sounds suspiciously like a mob boss threat to the chairman of the Federal Reserve. When asked about the possibility of Powell staying on the board of governors after his term as chair expires this May, Trump didn't mince words. He said, and I quote, "If that happens, his life won't be very, very happy, I don't think." Let that sink in. His life won't be very happy. This isn't a policy disagreement. This isn't about interest rates or employment data. This is a direct, personal broadside against the head of the world's most powerful financial institution. And it comes with a backdrop that makes the Nixon era look like a tea party. We are talking about subpoenas, criminal probes into Fed headquarters renovations, and a constitutional crisis that could freeze the bond market and send your 401k into a tailspin. If you thought 2025 was volatile, buckle up. The Fed civil war has officially begun, and the collateral damage is going to be the US dollar, the S&P 500, and potentially, your financial future. I'm going to break down exactly what this unhappy life threat means, the secret nuclear option Powell is hiding up his sleeve, and why a specific name from BlackRock might determine whether we see a market boom or a total systemic collapse later this year. Let's peel the onion. To understand why your portfolio is currently sitting on a powder keg, we have to understand the mechanics of what just happened in Switzerland. President Trump is currently wrapping up his search for a replacement for Jerome Powell. Powell's term as chairman, the boss, expires in May 2026. That's just a few months away. In a normal world, the chair steps down, shakes hands, and rides off into the sunset to write a memoir and give speeches for $200,000 a pop. But this is not a normal world. And this is definitely not a normal administration. The White House isn't just waiting for Powell to leave, they are trying to bulldoze him out. Why? Because the Trump administration has launched an aggressive, almost forensic legal crusade against the Federal Reserve. We aren't talking about mean tweets. We are talking about subpoenas issued by the Department of Justice and congressional allies, hinting at a criminal probe regarding the renovation of the Federal Reserve's headquarters in Washington. You heard that right. They are investigating the construction contracts and the remodeling costs of the Eccles building. Now, on the surface, this sounds like boring bureaucratic red tape. Oh, did they overspend on marble flooring? But you have to read between the lines. This is a classic pressure tactic. It's what we in the business call lawfare. By investigating the building renovation, the administration can subpoena internal documents, drag Fed officials in for questioning, and dangle the threat of prosecution over the institution. Powell knows exactly what this is. He has publicly denounced the probe as political pressure. He sees it for what it is, an attempt to break the Fed's kneecaps so they lower interest rates exactly when the White House wants them to. And this is where the unhappy life quote becomes terrifying. Trump is essentially saying, Jerome, if you try to hang around, we will make every single day of your existence a legal nightmare. We will investigate your expenses, your staff, your decisions, and your renovations until you quit. Why does this matter to you? Because the entire global financial system, the reason you can get a mortgage, the reason the dollar is the world reserve currency, is built on trust. It is built on the idea that the Federal Reserve makes decisions based on data, not because the president has a gun to their head. If the market believes the Fed is being blackmailed into cutting rates to juice the stock market before an election or to help service the national debt, the credibility of the dollar evaporates. And when credibility evaporates, inflation returns with a vengeance. We are talking about a potential replay of the 1970s, but with 2026 debt levels. Here is the twist that the algorithm isn't telling you. This is the House of Cards maneuver that Jerome Powell is considering. Most people don't know how the Federal Reserve structure works. They think the chair is the king. But the chair is just one of 7 members of the Board of Governors. Jerome Powell's term as chair ends in May 2026. But his term as a governor does not end until 2028. Under the law, Powell has every right to step down as chair, hand the gavel to Trump's new guy, and then sit right back down in his chair at the end of the table and serve as a regular governor for another 2 years. This is the nightmare scenario for the White House. Imagine this, Trump appoints a loyalist to run the Federal. Let's call him Mr. Yes Man. Mr. Yes Man wants to slash rates to zero to pump the economy. But sitting right there at the table, voting on every single decision, is Jerome Powell, the former boss, the man with the institutional respect, the man Wall Street actually trusts. Powell could effectively become the shadow chair. He could lead a rebellion inside the Federal. He could rally the other governors to vote against the new chair's reckless policies. He would be the ultimate check on Trump's power from inside the building. This is why Trump is threatening him. This is why he said his life won't be very happy. By staying on, Powell achieves two things. 1. He blocks a seat. The Board of Governors only has 7 spots. If Powell stays, Trump can't fill that seat with another loyalist. 2. He creates a power struggle. Every FOMC meeting becomes a cage match between the Trump appointee and Powell. Wall Street hates uncertainty. If we have a split Fed, with the former chair openly warring with the new chair, volatility in the bond market is going to skyrocket. We could see days where the 10-year Treasury yields swing 50 basis points in hours because nobody knows who is actually in charge. And there is a tactical layer here involving Governor Stephen Miron. Miron is currently a governor, but he's on unpaid leave from his post as a senior economic advisor to the president. His term technically concludes this month, January 2026. However, Fed rules allow a governor to stay in their seat until a replacement is confirmed. If Powell refuses to leave, Trump is cornered. He might have to use the empty seat currently held by Miron to install his new chair. This limits Trump's ability to stack the deck. He wants Powell gone so he can have 2 open seats, one for the chair, and one for another loyalist. Powell is standing in the doorway, blocking the entrance. So, who is Trump going to pick to replace Powell? This is the million-dollar question, literally, for your portfolio. In the Davos interview, Trump admitted he has whittled the list down. He said, "I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1 in my mind." One name. Who is it? The shortlist, orchestrated by Treasury Secretary Scott Bessent, contains 4 names. 1. Kevin Hassett. 2. Rick Rieder. 3. Christopher Waller. 4. Kevin Warsh. Let's analyze these, because the winner determines the fate of your money. The Kevin Hassett problem. Hassett was the front runner. He's a Trump loyalist through and through. But in a twist, Trump seems to be getting cold feet about moving him. In Davos, Trump said, "I like actually keeping him where he is." Why? Because Hassett is a bulldog on TV. He is the administration's best messenger on economic policy. Moving him to the Fed, where you are supposed to be quiet and apolitical, silence is one of Trump's best weapons. So, Hassett might be out of the running. The BlackRock connection, Rick Rieder, this is the name gaining the most momentum, and it is the most fascinating. Rick Rieder is the bond king at BlackRock. He manages trillions of dollars. If Trump picks Rieder, the message to the market is corporatocracy. Rieder is a Wall Street insider. He isn't an academic. He isn't a politician. He is a money manager. The markets would likely love Rieder initially. Why? Because Wall Street loves one of their own. They assume Rieder will protect asset prices, stocks and bonds, because that's what BlackRock does. However, the optics are dystopian. Merging the Federal Reserve with BlackRock? You are talking about the ultimate consolidation of state and corporate power. If you thought the Fed put was a conspiracy theory before, appointing a BlackRock exec basically makes it official policy. The technocrats, Waller and Warsh, Christopher Waller and Kevin Warsh, are the safe picks. They are traditional central bankers. If Trump picks them, the market breathes a sigh of relief, but the MAGA base might be angry that he didn't pick a disruptor. Trump wants a disruptor. Based on the maybe 1 in my mind comment in the Momentum reports, Rick Rieder looks like the man to beat. If Rieder gets the nod, expect a short-term rally in stocks, but long-term questions about whether the Fed is just becoming a subsidiary of the world's largest asset manager. But wait. There is a massive roadblock. You can't just walk into the Federal Reserve, you have to be confirmed by the U.S. Senate. And right now, the Senate Banking Committee is a minefield. Enter Senator Tom Tillis. He's a Republican, but he is not playing ball. Tillis has vowed to oppose any Fed nomination until the Trump administration resolves the subpoena nonsense regarding the headquarters renovation. Tillis is effectively holding the confirmation hostage. He is saying, "Stop investigating the Fed like it's a criminal organization, or I won't give you a new chairman." Trump's response in Davos? A dismissive wave of the hand. He's not going to be a senator too much longer. Trump is referring to the fact that Tillis is retiring. He isn't seeking re-election in 2026. Trump thinks this makes Tillis irrelevant, a lame duck. But here is the reality of Washington: a lame duck with a vote is still a dangerous animal. Tillis has nothing to lose. He doesn't need Trump's endorsement. He doesn't need donor money. He can burn the house down on his way out just to make a point about institutional independence. If Tillis blocks the nominee, and Democrats unite against Trump's pick, we could hit May 2026 with no confirmed chairman. What happens then? Chaos. If the chair seat is empty, the vice chair takes over temporarily. But the markets hate vacuums. If we are in the middle of an inflation spike or a recession scare in May, and the Fed is leaderless because of a political brawl in the Senate, the algorithmic trading bots are going to sell everything. We are looking at a scenario where the US government is paralyzed by its own internal warfare. The Treasury Secretary is fighting the Senate. The President is fighting the Fed chair. The Fed chair is fighting the Justice Department. This is not how a reserve currency nation is supposed to operate. This is how a banana republic operates. And the bond vigilantes, the global investors who buy US debt, are watching closely. If they decide the US is ungovernable, they will demand higher interest rates to hold our debt. That means mortgage rates go up, auto loans go up, and credit card rates go up. So, let's bring this back to your kitchen table. Why should you, watching this in London, New York, or Toronto, care about Trump beefing with Powell in Switzerland? Because when elephants fight, it's the grass that gets trampled. You are the grass. Here is the future outlook and what this means for your money. Scenario A, the unhappy life works. If Powell caves to the pressure and leaves in May, and Trump installs a loyalist or Rick Reader, stocks, likely a melt up. The market will anticipate easy money, lower rates, and a Fed that prioritizes the stock market over inflation. The S&P 500 could hit new highs. Inflation, this is the danger zone. If the Fed loses its independence, we could see a resurgence of inflation in 2027 to 2028. The dollar would weaken significantly. Your move, hard assets. Real estate, gold, and yes, Bitcoin. If the referee is captured by the players, you cannot trust the currency. Scenario B, the siege. If Powell calls Trump's bluff and stays on as a governor until 2028. Volatility, extreme. Every Fed meeting will be a leaked drama of infighting. Bonds, rates will be volatile. It will be hard to get a predictable mortgage rate. Stocks, the market might trade sideways or dip due to uncertainty. Wall Street hates confusion. Your move, cash and defensive stocks. Healthcare, utilities. Companies that make money regardless of who is yelling at whom in Washington. Scenario C, the constitutional crisis. If Tillis and the Senate block the new nominee. Total gridlock, the Fed enters paralysis. Market reaction, a sharp correction. 10 to 20% drop in equities is possible if the market feels the pilot is asleep at the wheel. The bottom line, we are entering a period where politics is overriding economics. The Fed put is being replaced by the Fed war. The comments made in Davos today are a signal. The era of the technocrat is over. The era of the political central banker is here. Trump is willing to use legal probes, public humiliation, and unhappy life threats to get his way on interest rates. For you, the investor, this means the rules are changing. You can no longer just look at PE ratios and earnings reports. You now have to analyze the political survival of the Fed chair. If Rick Reader from BlackRock takes the seat, watch for a corporate-friendly, asset-pumping Federal. If Powell digs in, watch for volatility. But whatever you do, do not ignore this. The separation between the White House and the printing press is the only thing keeping the dollar from becoming the peso. That separation is currently being demolished with a sledgehammer. Watch your portfolio. Watch the 10-year yield. And watch to see if Jerome Powell decides he's willing to live an unhappy life to save the institution he runs. I'm Boss. This is the state of the global economy. Don't forget to like, subscribe, and turn on notifications because you are going to need updates as this war heats up. See you in the next one.